Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Most Asian shares drop following a bruising session on Wall Street as fears around China's AI progress spark a sell-off. Nvidia loses $589 billion in market value, the biggest one-day drop in history. The dollar strengthens after President Trump says he wants across-the-board tariffs that are much bigger than 2.5%, and he'll soon add them to semiconductors, pharmaceuticals, and steel. And Israeli Prime Minister Benjamin Netanyahu is planning a Washington trip to discuss the Gaza ceasefire with President Trump. Well, it's just gone 8 a.m. across the Emirates. I'm Jumana Versace, back in Dubai after a week away. I missed a lot of news, it would seem, over the last 24 hours. I did not see it coming, but there you go. The gray swan event of the year, Deepseek, shaking up everything we thought about U.S. tech dominance in the AI space, having a dramatic impact on markets yesterday. And not just that, President Trump is back talking about tariffs, this time about universal tariffs of 2.5%. So yes, we are getting quite a sizable impact on the market. Let me just take you to the close yesterday. S&P index down 1.5%, still above 6,000. NASDAQ squarely in focus, down 3%. Why? Well, big declines in some of those big mega cap stocks. Nvidia down 17%. Deepseek is really questioning the hypothesis that the U.S. are massively ahead in this AI race, and also questions about the huge amount of CapEx spends that is going on with those hyperscalers, and really the advent of an AI model that has similar computational power as ChatGPT, but costs 1/30th amount of the cost of ChatGPT, is raising questions about the future of AI tech dominance and also about the future of CapEx spend. So we're going to be talking a lot about that on the show. But point is, it did lead to a massive sell-off in tech stocks overnight. Now, 10-year yields also rallying in sympathy. We rallied about 12 basis points throughout the course of the day, settling in now at around 4.54%. The market is pricing in 2 rate cuts for the year, which is in line with what the Fed is priced in with those dots, but still does show you that equities and the sell-off in equities is having an impact on fixed income yields in the last 24 hours. And then USD, you can see, is strengthening this morning, up about 0.5%. This time on back of more tariff threats out of President Trump, with him sort of touting the possibility of a universal tariff of 2.5% and an introduction on things like pharmaceuticals and steel as well. So that is another catalyst for the market this morning. As for Nvidia, we'll just take a look at this chart here. The stock fell almost 17% yesterday in trading. Those GPU chips that were powering so much of those LLMs, again, thrown into question about the utility of those chips and whether they're necessary to come out with those advanced computing models, as we saw from Deepseek yesterday. But the fall in the price was pretty dramatic, as you can see from that red bar, down 17%, lost almost $600 billion in value through its 200-day moving average, and is now back to being the second largest company in the world in terms of market cap. So this is just the putting into context how big of a move we saw in Nvidia yesterday. But since then, it feels as though a bit of stabilization has come through in the markets. Avril, just run us through what the reaction has been for some of these key Asian markets that are open today.
Yeah, Jumana, I think Asia's stock markets already experienced a head start to the selling and the ramifications from the Deepseek narrative a day ago. So what we're seeing in Japan as it led losses today is a continuation of the fallout. The chip stocks are the ones that are getting hit the hardest in Japan. You have Advantis extending losses to 10+%. These 2-day declines actually wipe about $9 billion of market cap of these stocks. And of course, it's worth keeping in mind that for the likes of Advantis, SoftBank, Tokyo Electron, these were among the stocks that rallied last week as SoftBank unveiled its participation in the US AI infrastructure fund. But of course, keeping an eye on what's happening in China as well in the Hang Seng, it actually managed to clock gains earlier of about 6/7 and, running on this idea that some of these Chinese firms will benefit from cheaper AI costs thanks to DeepSeek. But I think a little bit of profit taking ahead of the long holiday. So this is the picture as we head into the break. We'll also seeing today, of course, China, South Korea, Taiwan markets are shut. Jumana.
Yep. April, thank you so much. So somewhat of a stabilization coming through, but let's talk about what happened yesterday. Chinese startup Deepseek has upended global markets as its cost-efficient AI model is likened to that of OpenAI in terms of capabilities. Now, President Trump says its rapid rise should serve as a wake-up call for American industries.
The release of Deepseek AI from a Chinese company should be a wake-up call for our industries that we need to be laser-focused on competing to win.
For more, let's bring in Bloomberg's Newly Purnell. Well, Deepseek has really turned the world on its head in the last 24 hours. And for those of us not that familiar with Deepseek, just walk us through why it has had such a sizable impact on global tech markets. And I guess, the bigger question following from that is how much of a threat is it going to be to this idea that U.S. is way ahead of the rest of the world in terms of the AI race?
Right. Well, I think as some of our colleagues have written in a great headline about the rise of Deepseek, it really challenges the assumptions that the world had about the cost of AI. So the operating assumption until maybe a few days ago among most observers was that only the big U.S. tech titans, the Microsofts, Googles, Metas, OpenAIs, could afford to get the best chips from around the world and build out this really sophisticated technology, and that they were years ahead of rivals in China and elsewhere, partially because they had this huge capital allocation and this huge moat that they actually thought was a moat, will protect them because no one else could compete. And then what DeepSeek's really explosion onto the scene has shown is, well, maybe they're wrong, because maybe if you have a new, different kind of architecture, you can do it for less. We don't know what kind of chips they had access to, likely not the latest and greatest. And so this emergence shows, well, hold on a second, maybe what the U.S. tech titans have isn't special if it can be done for a lot less expensively and maybe in a more efficient way.
Yeah, and let's talk about the reaction in Nvidia. The stock dropped around 17%. I guess one way to look at it is the Deepseek were able to come up with this advanced LLM model using perhaps more basic chips, and therefore, again, throwing into questions the utility of those GPU chips that are manufactured by Nvidia. Is this sort of a Sputnik moment for Nvidia?
Yeah, that's what famed Silicon Valley investor Mark Andreessen called it. And in Nvidia's case, they've been a huge beneficiary of this race to build out, to invest in what people say is going to be the next groundbreaking technology, just like the internet of the smartphone. And so everyone has been rushing to buy Nvidia's chips because they can do these complex computations in a way that you need to train these large language models. And so everyone there, that's why the company's value has exploded over the years. And so if Deepseek, if they say they've created this chatbot, which is pretty good and pretty comparable to a lot of the ones in the West, and they said they've done it for $5 or $6 million compared to hundreds of millions or billions that others are investing and spending lavishly on these Nvidia chips, that calls into question whether there will be continued demand for Nvidia's chips. So they're right in the middle of all this, and I think that's why you're seeing the market reaction to their stock.
Yeah, and quite ongoing big market reaction there. So let's see how this pans out, especially given we've got earnings coming up this week out of those big tech stocks. Bloomberg's Newly Purnell, thank you so much. Well, on to the other big topic of the day. President Trump says he wants universal tariffs on U.S. imports to be much higher than 2.5%. That is in contrast with an earlier FT report that his newly confirmed Treasury Secretary Scott Bessent is pushing for the smaller number. Let's get more on the president's latest trade broadsides with our senior editor, Derek Wallbank. So we're back again talking about the possibilities of universal tariffs. Seems like Scott Bessent wants to introduce a gradual increase of up to 2.5%. President Trump saying he'd like to see more than that.
Yeah, well, it's really interesting, right? Because I think that Trump has been really clear for a long time that he wanted to do a sort of universal-based tariff, right? And we had done some reporting a couple weeks ago that said that some of his advisors were talking about where you start and how fast you go up from there. So the FT put out a story today that said Bessent's in favor of maybe 2.5% as a starting point, and then you go from there. Trump got asked about it by our Stephanie Lai aboard Air Force One, and Trump told reporters there that he doesn't think that Bessent wants that, and Trump doesn't want that either, and he'd like to go much higher. Trump did say he had a level in mind, wasn't ready to do it yet, but all of it's suggestive that Trump wants to do something in this space. I think a lot of market watchers had sort of, maybe that had gone out of mind. But not only that, right, you have a lot of White House officials who've been talking about tariffs as a critical plank for funding some of the things Trump wants to do. And in addition to that, Trump himself at that House Republican leadership event in Doral was talking through the idea of additional sectoral tariffs on a whole bunch of different things, from metals to pharmaceuticals and all sorts of stuff, on the idea that he wants to bring those into the U.S. It kind of all comes to this idea of, like, let's pull the U.S. tax rate down a little bit and let's plus it up with tariffs on products put in from abroad. That's kind of the framing that Trump and his allies are thinking about here.
Bloomberg senior editor Derek Wallbank, and it feels like this topic of tariffs and trade are going to continue to come up throughout the Trump presidency. All right, now turning to this region now, Bloomberg has learned that Israeli Prime Minister Benjamin Netanyahu is planning to visit President Donald Trump in Washington next week to discuss maintaining the ceasefire in Gaza. While not finalized, the meeting would come at a critical time, just weeks before the end of the first phase of the deal. Meanwhile, tens of thousands of Palestinians are traveling back to the devastated neighborhoods of northern Gaza. So for more on this, Paul Wallace, who leads our MENA economy and government coverage, joins us now. Let's just start with this potential visit of Prime Minister Netanyahu to the U.S. to visit President Trump. What do we know, and how is it likely to play into or affect the ceasefire that is in place right now?
Hi, Jumana. If it does happen, there's a good chance it happens next week, not before then. One of the big questions is actually whether Netanyahu can make that journey or whether his doctors allow him to. He had prostate removal surgery and came out of hospital at the beginning of the year, and that's quite a big operation. And he actually left hospital before his doctors advised him to deal with some issues in the Knesset. He's still kind of recovering from that, so we'll see if it happens. But the bigger context here is what happens after the 6 weeks of this truce in Gaza are over. We've got about 5 weeks left. There's a huge amount of pressure on Netanyahu, both within his cabinet and I think within the Israeli public as a whole, to continue this war once that truce is up. I think it's something that's kind of splitting Israeli opinion, and they will, if Israel does decide to go back to war after the 6 weeks are up, a lot of Israelis will be against that. But the bottom line is that this is a very complicated matter for Israel. There are plenty, as I said, plenty of people within the Israeli cabinet that simply think the only way forward is to carry on fighting Hamas until it's destroyed, as they put it.
Well, one of the most outspoken critics of the ceasefire, Ben Gvir, actually left the government. So that tells you just how split the discussion is within Israel. But at the same time, you're seeing these images of thousands of Palestinians returning back to northern Gaza. And of course, many of them don't have homes to return back to. What is the actual state of the ceasefire on the ground right now? Because we talk about somewhat of a a watering down of hostilities in the Gaza Strip, but equally what we are seeing is a rise in hostilities in the West Bank.
Yes. So I think when it comes to Gaza, you can use whatever term you want. It's fragile. The ceasefire is fragile. It's messy, but it is holding right now. As you mentioned, Gazans were allowed to go back. Civilians were allowed to go back to the north of the territory, sort of starting yesterday, and large numbers of them did that. They went on foot to go back to Gaza City, which was the biggest city before this war started, with over 1 million people, and it's been pretty much totally destroyed. So they're going back to homes that are effectively no longer there anymore. Mm-hmm. The West Bank has seen a rise in tension. I mean, this started, pretty much on October the 7th, 2003. But Israel, in the last week, has begun what it implies will be pretty much a long-term operation. Israel is saying it's to root out terrorists and elements of Hamas and Islamic Jihad and other groups. But there are a lot of sort of Arab and Western powers that are very nervous about this and think this is something that is going to make the West Bank even more tense than what it is now.
Yeah, we need to keep an eye out on the developments in the West Bank as well, not just the ceasefire in Gaza. Paul, thank you so much for that overview. Paul Wallace, who leads our MENA economy and government coverage. Well, still ahead, plenty to discuss on the markets still, with Deutsche Bank's Christian Nolting after yesterday's AI turmoil, more Trump tariff threats, and some major central bank decisions this week. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Most Asian shares dropped following a bruising session on Wall Street caused by fears the valuation of artificial intelligence companies has become excessive. Let's bring in Christian Nolting, Global CIO Private Bank at Deutsche Bank. Good to have you with us. Well, for those of us not involved in the weeds, Deepseek came as a bit of a surprise, but you were just telling me offline that it's been on your radar for a couple of weeks now. But I look at the market reaction yesterday, and for me, it speaks of two things. Number one is people had just taken for granted that the U.S. were miles ahead the rest of the world in terms of the AI race. But then two, valuations are pretty high to begin with. So we were due for a bit of a correction.
Yeah, I think honestly I would say even healthy to do that and to see that happening. So I think that competition at one point in time is coming. Was to be expected. Of course, you cannot time it by the day.
Yeah.
Indeed, we looked at Deepseek at the beginning of the year from our Asian CIO, so we had some discussion about this. And so I think it's quite a healthy correction, to be very honest. And honestly, if I may,
please.
I think if you look through, if cost is coming down on AI, that's increasing productivity growth. So even yesterday, some companies were up. Let's not forget about this.
Yeah.
But I think down the road, that's a positive thing.
Yeah, it's interesting because our Bloomberg intelligence team actually put out a report saying this is a net positive for financial firms, institutions who'd been looking to spend a whole ton of money on AI applications. And of course, if the cost is a lot lower, then that could be a benefit, a net benefit for some companies. But what does it mean for the hyperscalers, the Metas, the Amazons, who've been pouring in billions of dollars? Meta last week announcing their huge investment plan as well.
Yeah.
Does this set them back?
Well, you need to look at margins, of course. I think they could come down a little bit because of that lower cost. So let's see what you can export from China, import into the US. Think about it, right? So from that perspective, yes, margins could come down a little bit, but still, I think demand is extremely high. So that's why I call it healthy and not the end of the world. And you talked about valuations. I had some questions. Is that the .com bubble burst moment? If you look at valuations of NASDAQ, yes, it's a bit higher, so 27 if you look at forward PE. But .com was 80 around. So from that perspective, yes, that's why I'm saying it's a healthy correction.
And these big mega cap stocks are still putting in earnings growth. We're still heading into earnings season. It kicks off tomorrow for some of these big names with north of 20%, right? When S&P as a whole, you're talking about earnings growth of 8%. At the beginning of the year, I was having lots of conversations with market analysts, and everyone seemed to be quite bullish on the path forward in the U.S., both from a growth perspective and also for stock markets as well. Do you think what has happened in the last 24 hours is the gray swan event, in that it's going to stop everything in its tracks?
No, I don't think it stops everything. So I think a lot of investors, analysts have also, including us, have also said there will be higher volatility in 2025. So don't expect 23, 24, the 20+% on S&P to repeat all the time. And if we look at our forecast, we also said, let's not expand on the multiple. Let's really look at earnings. And if earnings go higher, which we do expect, then it's fine. But let's not work on the multiple because there could be some setbacks. Now we get already one in January, but I guess it's not the last one this year. So I think that's the way you need to navigate in 2025.
What are clients looking to do around tariffs and the constant threat of tariffs? Every day we walk in, there's a new tariff headline. Today it's 2.5% universal. I mean, who knows really what they're going to do? But how do you trade around that volatility?
So actually what we are thinking, right, tariffs I think are coming. The amount is to be discussed and will change. It could go up, so lower level start. Maybe it's not 2.5, maybe it's even higher, but then go up. I think eventually, also for the US consumer, is inflationary. So we calculate a little bit, Mexico, Canada, Trump mentioned 25%. So if you look at PCE in the US, that's roughly 5%. Mexico, Canada, so 25% is 1.2. And then there's not a pass-through rate of 100% on these prices to the consumer. Say it's 50%, so it's 0.6 on PCE. So sorry for so many numbers, but it's inflationary. And I think that's what we need to take into account.
One final quick question, because I think it's important. What do you think is the #1 consensus trade amongst your clients right now?
#1 consensus trade is still the US, I would say. Going into US, looking to the US, and maybe there will be some rotation throughout the year. So I think that's something clearly to watch.
Yeah, especially as we head into earnings season. Well, good to chat to you. Thanks for stopping by during your tour of the region. That was Christian Nolting, Global CIO of the Private Bank at Deutsche Bank. Thank you very much. Well, still ahead, as Rwanda-backed rebels take a key trading hub in DRC, we discuss the impact later this hour. We'll be live in Kigali. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Well, we are still keeping tab of what markets are doing in reaction to the Deepseek sell-off. Well, the catalyst was Deepseek yesterday across global markets. Today, the handover from futures is slightly more muted. S&P futures basically trading flat after a pullback yesterday of almost 2%, so 1.5% yesterday lower for the S&P. Nasdaq also leaning towards the green today, up 0.2%. This after a pullback of more than 3% in trade yesterday. Nvidia down 17% throughout the course of the day, using a market cap of almost $600 billion, and now technically the second largest company in the world. And you can see as we head into the European session, also slight bit of green on the board too. Bear in mind that many of these Asian markets are closed for lunar holiday, including China, Taiwan, South Korea, Indonesia, and Vietnam. So a bit of a muted reaction over there. But coming up, we are going to be talking more about Deepseek as it triggers a new stage in the AI rivalry. We'll discuss the outlook with Aletheia Capital coming up next. What does this mean for the U.S. tech dominance and questions beyond? This is Bloomberg. Good morning again. This is Horizons Middle East and Africa. Our top stories this morning. Most Asian shares dropped following a bruising session on Wall Street as fears around China's AI progress spark a sell-off. Nvidia loses $589 billion in market value, the biggest one-day drop in history. The dollar strengthens after President Trump says he wants across-the-board tariffs that are much bigger than 2.5%, and he'll soon add them to semiconductors, pharmaceuticals, and steel. And Israeli Prime Minister Benjamin Netanyahu is planning a Washington trip to discuss the Gaza ceasefire with President Trump. It's just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Two big stories of the day, the Deepseek effect and further discussions around tariffs from the Trump administration, this time with the president touting a potential tariff of more than 2.5% on universal goods. So something to think about there. But this was the reaction yesterday for some of the U.S. majors after that Deepseek news came out, essentially questioning U.S.'s AI dominance and also throwing into doubt the amount of capex spending that is going on in that space, given that Deepseek is producing a model with about 1/30th of the cost of ChatGPT. So again, big questions for the space. S&P ended the day down 1.5%, NASDAQ down basically 3%, very close to 3%. But the big tumble came in the form of Nvidia stock down 17%. The stock losing almost $600 billion in market cap, breaking through its 200-day moving average, and now becoming the second largest company in the world by market cap. So again, a lot of the questions about AI dominance and about the chips that Nvidia has been manufacturing in order to produce some of these high-tech models. Now, let's flip over, though, because the handover overnight is actually somewhat more subdued. So what we're seeing here is S&P futures are trading slightly in the red, only down about 7 basis points, so basically flattish. NASDAQ futures also trading up about 0.8%. So some cautiousness prevailing as we head into the European session, and certainly a bit of a turnaround from some of the deep red that we had on the board yesterday. 10-year yields also sitting at around 4.55%. We rallied 12 basis points throughout the course of the session yesterday as risk-off sentiment prevailed. And then the USD, we're seeing some love come back into the USD this morning. The greenback up about 0.5% on those new tariff threats out of the Trump administration. So handover somewhat flattish today, but again, keep an eye on the greenback. Let's check in further, though, on how some of these Asian markets are faring. Avril Hong is in our Singapore studio. And Avril, many of these Asian markets are out for the Lunar New Year, but so far the handover seems to be a little bit more cautious than we had yesterday.
Yeah, very cautious, in fact. I mean, you just saw that red hit crossing the terminal, India's small cap gauge plunging. I thought I'd also rate through what we're seeing in Hong Kong markets because, of course, today is a half day. So this is the picture going into the long holiday, the Hang Seng, which earlier clocked 6.7% gains. This was thanks to the idea that some of these Chinese consumer tech names might benefit from cheaper AI costs thanks to Deepseek. Now, pairing losses. This is, again, the picture going into the long holiday and maybe some profit-taking underway, although the Hang Seng Tech manages these 0.8% gains. I thought it was also interesting how SMIC, this is a Chinese chip company, were among the stocks which actually reeled and showed losses 6% yesterday on the back foot today. And some, such as the likes of Morningstar, say that maybe this means less urgency for developing cutting-edge AI chips, maybe less government support. So that might be something that's affecting the chip stocks in China. Flip the board. I thought I'd also put things into further perspective for you and show you this chart courtesy of MLI's Mark Cranfield. When you look at the Hang Seng Tech, the golden cross that was formed back in October actually still at play. This typically bodes well for Chinese tech shares, particularly the Hang Seng Tech. But of course, keep in mind, while Chinese markets are shut, we have those big tech earnings this week, so a lot could change as well. Jumana.
Avril, thank you so much for the overview. Well, Chinese startup Deepseek has upended global markets as its cost-efficient AI model is likened to that of OpenAI in terms of capabilities. President Trump says its rapid rise should serve as a wake-up call for American industries. Joining us now is Nirgunan Tirchelvam, the head of consumer and internet at Aletheia Capital. It's great to have you with us. I've got so many questions I want to ask you, but first of all, let me just start off with the number one question that is on people's minds, and that is, how big of a threat do you think this R1 model that was launched and unveiled to the world yesterday, how big of a threat is it going to be to the likes of ChatGPT and Google's Gemini?
It's very difficult to say at this point because we are at a very early stage in the development of AI. We need to focus more intensely not just on the costs, but also the benefits. If you look at the benefits of this technology, we still haven't got a grip on how it's going to change e-commerce, ride-hailing, food delivery, and a number of other sectors. And we need to look at both sides of the equation, the costs and the benefits, to have a more meaningful analysis of this trend.
So the R1 model is reportedly consuming about 1/30th of the costs of ChatGPT. How was Deepseek able to create such a model with such lower costs?
It's not entirely clear whether those statistics are valid. There are lots of theories about the pros and the cons, but what we need to intensely focus on are the benefits. And one way of looking at it is to go back into history. If you go back into the 19th century, there was very heavy investment in railways in the 1870s, which is similar to the heavy investment that we are seeing in this technology. What people didn't come to grips with is the benefits that it would have in fostering better commerce between, say, London and Manchester, and reducing the cost of a number of important items, improving commerce. So if you take the benefits of this technology, whether the costs are appropriate or not is for others to answer, or for more technologically oriented people to come to grips with. But what you need to focus on is, let's say, the impact on e-commerce. Only 51% of e-commerce companies are using AI. Only 1 out of every 5 purchases is done using AI or AI bots. So we are still at a very nascent stage in the uses of this technology, and investors need to look at it from a holistic perspective.
Yeah. I don't want to ask you for a specific view on Nvidia as a single stock, but I do just want to ask you whether you think the reaction in Nvidia yesterday was warranted. The stock was down more than 17%. People are questioning whether Nvidia really should have this dominance in terms of its GPU chips and their capabilities, given that this Chinese competitor was able to launch a model with similar computational power with reportedly less high-tech chips. Is this going to be a theme going forwards?
At this juncture, it's difficult to come to grips with some of the implications of the cost assumptions that people are talking about. We are still within the first few weeks of the launch. What you need to understand is that when there is a disruptive technology that changes the way people conduct business, as the internet did in the 1990s or the railways did in the 1870s, there is tremendous volatility. And investors need to understand that volatility is part and parcel in investing in a disruptive technology. And you need to come to grips with both sides of the equation to understand this better.
Yeah. What about geopolitical concerns? President Trump says this is a wake-up call, which is interesting. But perhaps it is a reminder to U.S. tech firms not to take their dominance for granted. But I do wonder whether if he could make a move to perhaps limit the usage of Deepseek within the United States. Do you think that we are likely to see geopolitical barriers go up?
We are facing a situation where there is a great deal of tension between the United States and China as far as technology is concerned, whether it's AI, whether it's in the creator economy, whether it's in ride-hailing. There seems to be a lot of disputes between these two giants. But the Trump administration has shown early signs that it wants to create a degree of détente in this dispute. And there are early signs that, for example, the TikTok ban could be overturned. And if that is an indication, we could see improvements in the relationship between the two giants as far as technology is concerned. And investors need to understand that there could be alternatives to the established players such as TikTok, and you need to be nimble and be able to understand the evolving dynamics of the US-China tensions.
Yeah, really valid point there, what you said about TikTok, and perhaps some dilution of the stance coming out of the Trump administration. Nirgunan Tirchelvam, great to have you on the show with us today, head of consumer and internet at Aletheia Capital. Now for a look at some of the other stories we're following this morning. President Trump is preparing an executive order for a next-generation defense shield to protect the U.S. against ballistic missiles and other long-range attacks. The order will commission a system similar to Israel's so-called Iron Dome. The White House says the attack by ballistic, cruise, and hypersonic missiles is a catastrophic threat facing the United States. Scott Bessent has been confirmed as the next U.S. Treasury Secretary, winning a Senate vote 68-29, including support from 15 Democrats. The former hedge fund manager's policy objectives include 3% GDP growth and a 3 million barrel per day increase in U.S. oil production. Bloomberg has learned that Turkey's government is hoping to reach a $6 billion defense deal with Saudi Arabia that could see the kingdom buy warships, tanks, and missiles. The agreement, which would involve Saudi joining a Turkish jet-building project, could be finalized during a visit by President Recep Tayyip Erdogan to the kingdom around March. EU foreign ministers have agreed to extend sanctions on Russia after Hungary lifted its opposition to the renewal. Budapest had been stalling the decision since December, with Prime Minister Viktor Orban saying he wanted to wait for Donald Trump's inauguration before deciding whether to roll over the restrictions. In return for Budapest backing down, the EU said it would provide several reassurances relating to the bloc's energy security. And coming up, fears of an all-out war ramp up after rebel group seizes Congo's largest city of Goma. The details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Dubai. Rwanda's dollar bonds slipped after a rebel group aligned with the country said it seized a key trading hub in the Democratic Republic of Congo. The M23 militia group says it seized the city of Goma in one of the most significant escalations in years in the long-running conflict. Bloomberg's Ndiro Ganga is in Kigali in Rwanda, so very close to where all of this is happening. First of all, Ndiro, what kind of international response have we seen since M23 announced that they've seized Goma?
Hi, Jumana. So the international community has been relatively muted, not just last week, but in the last 4 years since tension began escalating in the eastern part of DRC in 2021. During the emergency meeting at the United Nations Security Council, we saw U.S. and some members condemn Rwanda, but they stopped short of imposing sanctions on the country. And observers said this is because President Paul Kagame has amassed a lot of influence, not just locally, but globally. And he's become such a critical ally. Take France, for example. They depend on Rwanda's army to protect their mega projects in Mozambique. Total Energy has a $20 billion natural gas project in Mozambique. But this takeover of Goma looks like it's a red line that the country has crossed because we're seeing criticism beginning to trickle in. The ambassador to France at the UN has condemned M23's offensive with active support from Rwanda. And then you also have the UK Deputy Permanent Representative at the UN saying attacks against peacekeepers from the UN can form basis for sanctions against Rwanda. But while the diplomatic community tries to decide what is the next move and whether to impose sanctions on Rwanda or not, Goma is currently a city in the dark. There's no electricity, there's no water, food prices are rising, and Red Cross says that hospitals are overwhelmed and people are turning schools into makeshift shelters because they've had to run away from their refugee camps for safety.
Yeah, I mean, it's a city that is home to 2 million people. We're talking about 2 million people being impacted here. What has been the financial and economic impact of Rwanda's involvement so far, and what can we expect moving forward?
The impact is beginning to become very clear. Rwanda's 2031 issue dropped by more than a cent to trade at 84.3 cents to the dollar. And this is the worst performing in the Bloomberg index of hard currency debt from emerging and frontier markets. And Red Intelligence attributes these losses to a higher pricing of political and economic implications from the escalating tension in the DRC. You also have the Rwanda Defense Forces spokesperson confirmed that 5 Rwandans have lost their lives, 35 have been injured from the bombshells from across the border, and 4 forces have been deployed not only for the safety and security of the citizens, but also to protect Rwanda's territorial integrity. And we're also hearing the same kind of language across the border in DRC, where the government say they're not going to cede even an inch of their territory. And this is raising prospects of a full-blown war between the two countries. In the next 24 hours, both leaders are going to meet with President William Ruto, who has convened an extraordinary heads of state summit in the East African Community bloc to try and broker a peace deal between the two countries.
Bloomberg's Adiro Oganga in Kigali, Rwanda. Thank you so much for that report. Now for a look at some of the other stories we're following today. Somalia says it's completed technical discussions with Egypt regarding Cairo's participation in a peacekeeping force in the Horn of Africa country. The mission in Somalia will also include soldiers from neighboring Ethiopia, which has historically been a key contributor to the UN-backed force that's already been fighting the Al-Shabaab militant group for almost 2 decades. Mozambique's central bank has extended its longest easing cycle since 2017. This as the East African nation looks to boost an economy shaken by post-election unrest. Mozambique has witnessed widespread disruptions since disputed elections in October, which extended the ruling party's 49-year rule. Ghana, meanwhile, has kept its key interest rate unchanged for a second time in a row as it fights inflation. The Monetary Policy Committee held the rate at 27%, while forecasting price pressures will ease as the nation's new government tightens public finances. Gabon's dollar bonds fell for the first day in 10 after Fitch Ratings downgraded the country deeper into junk status. The latest development may dent investor sentiment, which had just begun to improve after the oil-rich nation's junta said it will hold presidential elections in April. Coming up, the UAE is bolstering efforts to enter the healthcare market. More on M&A that's going on in that space next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Abu Dhabi's Pure Health is buying a majority stake in a Greek hospital chain from CVC Capital Partners. The deal values the hospital firm at about $2.3 billion and is part of Abu Dhabi's efforts to diversify its economy away from oil. Bloomberg's Laura Gardner-Cuesta joins us now. Laura, interesting deal that's going through. Just walk us through what we know about it and the numbers that are crossing the wire, $2.3 billion.
Yeah, so it's a very large deal. It's essentially Pure Health is buying a 60% stake in the Greek hospital operator. CVC will retain a minority stake, but it's a very significant deal for an Abu Dhabi firm. And this comes on the back of a number of international M&A deals that Pure Health has been doing. So in 2023, they acquired a UK hospital business, and they also acquired a US hospital business. So clearly they have these ambitions of expanding globally, and the CEO actually told us that their target is to get around 50% of their revenues outside of the GCC.
I was going to say that. It seems pretty interesting that they're expanding their geographic reach outside this region into Europe. We're talking about UK and we're talking about members of the Eurozone here. Why do you think that is part of their strategy?
I understand that they see Europe as an interesting play for healthcare. Obviously, it's an aging population. The healthcare assets are very good. And for them, yeah, it's a diversification play. And yeah.
But health has been a big focus, a big strategic focus for the UAE. How does this acquisition fit into the bigger picture of what the UAE is trying to achieve here?
Absolutely. So healthcare is a big focus for many countries across the GCC, but in Abu Dhabi specifically, it's led to a lot of M&A, and both internationally and locally. Pure Health itself, Bloomberg News has reported that they're looking at other acquisitions, including NMC Healthcare in the UAE. But in the Abu Dhabi Wealth Fund ecosystem, there's been a lot of M&A. We know there's been the creation of M42 recently, which is essentially a Mubadala-backed with G42 backing as well. So they want to create this sort of healthcare giant backed by AI, and they've been doing some acquisitions also in Europe. They acquired a dialysis center for, I think it was a 2.5 billion valuation in the past few years. And we also know, obviously, Abu Dhabi's wealth fund ADQ is also doing a lot of consolidation around the pharmaceutical assets. So it's definitely a lot of M&A around that space.
Yeah, fascinating. So Pure Health with the big deal this morning. Bloomberg's Laura Gardner-Cuesta, thank you so much for the overview. Now for a look at some of the other stories we're following. LVMH is selling the stake it owns in Stella McCartney back to the brand's founder as the luxury group cleans up its portfolio amid a downturn for high-end goods. McCartney will repurchase the minority stake after a collaboration of more than 5 years. LVMH, which owns Louis Vuitton and Christian Dior, is set to report earnings later today. UBS is said to be making a wave of job cuts in its home market, with hundreds of staff in Switzerland getting notice in recent weeks. Sources say the current round of cuts is across the ranks, including higher management. UBS has said it expects about 3,000 Swiss redundancies as it integrates Credit Suisse. Bloomberg has learned BNP Paribas is planning to raise bonuses for its investment bankers, with equity trading and debt capital markets likely to benefit the most after a strong year. The French lender is looking to increase total variable compensation in the division by about 5%, although the decision is not finalized. An increase of that size would be less than the double-digit gains expected at the big Wall Street banks. And speaking of Wall Street, let's take a look at how equity futures are shaping up as we head into the European session. Well, after a big down day yesterday, what we are seeing is futures trading sideways today. S&P futures sitting above 6,000, still trading basically flattish, marginally negative on the session. Nasdaq also creeping towards the green, up 0.2%, even though we were down about 3% yesterday. Deepseek shaking things up, taking up the tech community. Nvidia stock down 17% yesterday in trade. So it looks as though recovery is in sight as the market continues to digest the impact of the Deepseek chatbot announcement, R1, and the impact that could have on U.S.'s tech domination. So big questions are being asked here. But so far, it looks as though we are shaping up for a more subdued session, just looking at all of these futures. But coming up in the next hour, we're going to continue to discuss the market fallout, this time with Frederique Carrier from RBC Wealth Management. I'm Jumana Bersachi in Dubai. Stay with us as Jen joins me from Johannesburg in the second hour. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Most Asian shares drop following a bruising session on Wall Street as fears around China's AI progress spark a sell-off. Nvidia loses $589 billion in market value, the biggest one-day drop in history. The dollar strengthens after President Trump says he wants across-the-board tariffs that are much bigger than 2.5%, and he'll soon add them to semiconductors, pharmaceuticals, and steel. And Israeli Prime Minister Benjamin Netanyahu is planning a Washington trip to discuss the Gaza ceasefire with President Trump. Well, good morning again, everybody. It's just gone 9 a.m. across the Emirates. I'm Jumana Versace in Dubai. And Jen, what a day. We've got a lot to talk about. But a few days ago, nobody had heard of Deepseek, and now it's what everyone is talking about.
Yeah, nobody except Robert Lee, actually, from Bloomberg Intelligence, and a lot of other tech investors.
That is
but
true.
It was fascinating to see just the raft of, reaction to what we did see on Monday. I'm Jennifer Zabasaja in Johannesburg. It's just gone past 7 a.m. Welcome to the second hour of Horizons Middle East and Africa. Great to have you back, Jumana.
Thank you, Jen. Well, I'm actually going to start the viewers off with a funny story by one of our producers, Yuan, who was telling me this morning to talk about that rivalry that's going on between Deepseek and ChatGPT. He actually asked the chatbot, the Deepseek chatbot yesterday, why has there been such a big market sell-off? And the chatbot didn't know what to say, but ChatGPT did know what to say because they blamed it on Deepseek. So it tells you about, I guess, the relative intelligence, or at least the ability to make note of what's been happening in these global markets as far as the ChatGPT LLMs are concerned. So interesting tidbit there. But as for the market reaction yesterday, we did have quite a sizable impact on U.S. stocks. We had the S&P end the day about 1.5% lower. NASDAQ down 3% lower. Of course, some of those big tech names got hit by, again, the questioning of the dominance of some of these AI models versus their Chinese counterparts. Nvidia down 17%, as you can see there. Its biggest drop in history. And I think the biggest drop ever for a stock in terms of market cap, almost losing $600 billion yesterday throughout the course of the day. But let's flip over because the handover this morning is slightly more positive. And you can see that these futures are actually inching towards the green now. So S&P futures not doing a whole lot, but at least they're not trading in the red. NASDAQ futures actually tilting towards the green, up about 0.25%. So a little bit more positivity coming in this morning and definitely paring back some of the losses that were seen on the board yesterday. 10-year yields, 4.55. We rallied 12 basis points throughout the course of the day yesterday as risk-off sentiment sort of took over. And then USD seeing some money come in to the dollar this morning, up 0.4%. This on the Trump administration talking about the potential of universal tariffs of potentially even more than 2.5%. So again, a net positive for the USD, and that is driving that part of the market this morning. As for the rest of Asia, well, it is Lunar New Year, so many markets are closed, but Avril is going to give us a run through of what the markets that are open are doing today.
Yeah, I think it's all about this continued testing of the AI investment case. And for the markets that are open, key among those that were the drag yesterday, Japan. And that's an extension of the losses you're seeing today. The Nikkei experiencing its worst, steepest losses in 2 weeks. It's really the chip stocks that are dragging it, like Advantis. This is, of course, a supplier of testers for Nvidia. 2-day losses of about 18%. You look at SoftBank under immense pressure as well. But keep in mind, some of these stocks had rallied pretty hard last week following SoftBank unveiling that it was going to be participating in the US AI infrastructure fund. But just to illustrate further, that is the entire AI supply chain that is being forced into a rethink. Look at the declines on Furukawa. This is a data center cable maker. Pressure as well on Tokyo Electric Power. This is a power generating company. Remember, data centers very power hungry. So just to give you a sense of the AI supply chain that's being affected in terms of market reaction today, Jumana.
Yep. Avril, thank you so much. A significant reaction on some of those chip stocks. Now, the announcement from Deepseek has been a wake-up call for investors, suggesting U.S. AI hegemony could be displaced at a fraction of the cost.
I don't think it's about China versus U.S.
Right.
It's really about closed source versus open source. And more and more American developers should leverage the open source and what DeepSeek had done and build on top of it and make it greater.
Really amazing what they have done. Fraction of training costs, fraction of interference costs to produce a model like that in DeepSeek. But it will unravel basically the path of spending.
Of course, I think a healthy dose of skepticism is very, very good. It's needed. But even if you multiply their spend and their cost by 10 times, 20 times, this is still an order of magnitude in terms of the cost reduction.
They're not really a company that's out there trying to compete directly with the big U.S. players. So in that sense, I think it was an overreaction to the release of this model.
Now, Deepseek triggered a bruising Monday session on Wall Street. Most Asian shares following into Tuesday. Let's look at the outlook, though, with Frederique Carrier, the head of investment strategy at RBC Wealth Management, joining us now. Frederique, great to get you on today, especially after what was a pretty tumultuous Monday for many investors. Listen, we just heard from some investors saying that this was an overreaction. Perhaps everyone has a different take on what it really was. But even before the sell-off, we did see the questions surrounding some of these high valuations coming down ever so slightly and a broadening out or wanting to broaden out to more value-driven stocks. Was this inevitable? What's your take?
Well, a technological breakthrough like this was perhaps difficult to predict. And we do think that the volatility of the shakeout that your reporter Avril mentions, that volatility could last for another 2 weeks as investors try and assess what the consequences will be on the broad AI sector and the supply chain. But certainly the broadening out of market dynamics is something that has preoccupied markets for almost a year now, given that most of the performance had been driven by the Mag 7. And we have seen earlier this year value outperforming growth, small cap outperforming large caps, and sectors such as industrials, materials really outperforming. So this could, on a trading basis, continue, but really for the broadening to be sustainable, we need to see really a recovery in all these different sectors. An earnings recovery in all these different sectors.
So then what are your questions, Frederique, when we're looking at some of the earnings that are coming out over the next few days?
Well, we want to see comments clearly on how people think about tariffs, how corporates are positioning. We want to see comments in terms of the consumer, whether the low end is behaving as it had. Over the last year, there had been concern that the cost of living crisis had really hurt low-value goods, and we want to see whether there is a reversal of that, whether high-value goods, there is a bit of a recovery. We want to see also comments on margins with the ability of passing on costs and certainly layoffs, to give us an insight into the employment numbers. But so far, we have to say that it's still early stages, but the earnings session, the earnings season is quite promising, with more than 80% of companies giving better than expected earnings numbers.
Yeah, it's going to be interesting tomorrow to see what Microsoft, Meta, and Tesla come out with. They're kicking things off with the mega caps. I want to turn to macro. I thought it was pretty interesting yesterday that the rates market reacted to some of those stock-specific Magnificent Seven market reactions. And the market has now moved once again to pricing in more rate cuts out of the Fed. Do you think that this Deepseek event should have a knock-on effect to the macroeconomy?
Not a directly one. I think the decision has already been made, and we're looking at a U.S. economy which is still resilient, inflation which is broadly stable, and policies coming out of the Trump administration which are likely to be inflationary if you think of fiscal policy, immigration, and tariff policy. So we have no rate cuts baked in for all of this year. We expect the Fed to stay put this week. Perhaps the press conference will be a little bit less hawkish than it would have been otherwise, but we don't expect rate cuts this year in the U.S.
Interesting. And when you hear well, every day there seems to be some comment about tariffs, but today's news about tariffs is President Trump wants to apply at least a 2.5% universal tariff on goods and wants to introduce some things like semiconductors, pharmaceuticals, steel. What should be the read across to markets from that?
Well, read across, at the moment, it's just words, and we expect a lot of comments coming out. We have to see really what actually is implemented. And I think the first events that people will look at is what happens in the case of Mexico and Canada. We do expect that in the end, the threats will not be entirely followed through, that tariffs will be imposed, but perhaps on a narrower range, perhaps not as much as initially talked about, depending on what actions, what remedial actions Canada and Mexico take. But of course, there can be a number of more positive outcomes and more negative outcomes which can happen, and that leaves markets with a lot of uncertainty. Hence, we do expect a lot of volatility.
Frederique, does that mean a flock to haven trades then? I mean, we did see treasuries, at least in the U.S., increasing on Monday. Do you and your team believe that is where it's safe to position right now?
So it would depend on prices, but if we want to shield ourselves from inflation worries, from business cycle worries, from interest rate worries, for us, a strategy of long-short commodities is really an important diversifier for portfolios. A lot of these commodities, ranging from energy to agriculture, are move with in line, shall I say, or with the weather, which is a very different cycle. And so for us, a very flexible strategy in terms of commodities, in terms of a broad range of commodities, is really a good diversifier for portfolios.
Frederique Carrier, the head of investment strategy at RBC Wealth Management, thank you so much for joining us today. Well, coming up, the tariff talk continues. We get the latest on President Trump's plans for universal levies next. This is Bloomberg.
Welcome back to Horizons, Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. President Trump says he wants universal tariffs on U.S. imports to be much higher than 2.5%. That's in contrast with an earlier FT report that his newly confirmed Treasury Secretary, Scott Bessent, is pushing for the smaller number. Let's get more on the president's latest trade broadsides with our senior editor, Derek Wallbank, who has been following the story. So, Derek, thanks for being here. We did hear Trump say that he has it in his head, but not yet definitive. I mean, can you walk us through some of these latest comments and how they differ from what we've heard from the president before?
Sure. There's been a talk about universal tariffs for a while now. It's something that Trump had brought up repeatedly, but some of his advisors have been talking about starting slow and getting bigger, right? Like a gradual ramp up to avoid some sort of like instant inflation shock. So that's kind of where we are here. There was a report out that Scott Bessent wanted to start that process at 2.5, and Trump told reporters in response to a question from our Stephanie Lai aboard Air Force One, he said, I don't think that's what Bessent wants to do. And not only that, that's not where I want to be. I want to be higher. He did say he had a number in mind, did not say what that number was. And you got to package this with the remarks that Trump made to Republicans in Congress at their retreat in Doral, where he was talking about sectoral sanctions across a wide variety of different things, right? Metals to pharma to other things like that. So this is a president that, yes, he hasn't put tariffs on immediately. They didn't snap on to everyone around the world in his first day in office, but he's very clearly putting these as part of his overall economic plan.
And Derek, we also did hear the president commenting on what was going on with Deepseek. How does this play into a lot of the comments that he's given about China and the competition there with the U.S.?
Yeah, I thought that was a really interesting comment, actually, right? There had been a widespread of what do you think Trump could say? You know, does he want to say, oh, I want to go ban this, or does he want to go somewhere else? Trump actually came out and said that it was reasonably positive to be able to have that level of innovation at that kind of price tag, right? You know, the idea of we're talking about all of these AI Ferraris, but not everyone's going to drive a Ferrari. What's the AI version of a Toyota Camry, right? And so this is kind of an interesting move from Trump. You know, he has said very clearly, he put out an order on this, wanting the U.S. to be the epicenter of AI innovation. This is going to be a big challenge to that. But Trump's first remarks were really toward the price tag, saying that it was a reasonably positive development on the price issue.
And Derek, just finally, I mean, we did mention we're seeing a lot of Trump's nominees getting appointed this week. How do these people all sort of come together to then push his economic agenda?
Yeah, well, Trump so far is getting pretty much everyone he wanted through the Republican-held Senate. He did have a brief miss with his first nominee for Attorney General. That guy had to pull out because of scandals, but everybody else has gone through okay. There are some harder ones coming up, but Trump is developing a pretty kind of diverse ideological mix within the Republican overall tent. But look, I want to be as clear as I possibly can for people who are not U.S.-based, who haven't seen Trump up close or maybe don't remember what it was like 4 to 8 years ago. This is the Donald Trump show, right? No matter what else is happening, no matter what is floated, this is going to be the Donald Trump show, and he's going to be the one who decides. And there may be cases where somebody floats a very legitimate plan, says this is what we're working on, it gets reported on, everything's legit. Trump hears it, says, that's not how I want to go. And all of a sudden, that's not how we're going. That's going to be a change from how Biden was 4 years ago. So all of these folks, they are in advisory capacities. But Donald Trump is the one who's going to be calling the shots on a lot of things.
Right, which is, of course, counter to what we did see from his first administration. We'll leave it there. Bloomberg's senior editor, Derek Wallbank. Derek, thanks as always for joining us.
Well, turning to this region now, Bloomberg has learned that Israeli Prime Minister Benjamin Netanyahu is planning to visit President Donald Trump in Washington next week to discuss maintaining the ceasefire in Gaza. While not finalized, the meeting would come at a critical time, just weeks before the end of the first phase of the deal. Meanwhile, tens of thousands of Palestinians are traveling back to the devastated neighborhoods of northern Gaza. So to talk about this and more, let's bring in Stuart Livingston-Wallace, Bloomberg's executive editor for the Middle East, North Africa and Russia. Let's maybe just start with this prospective Netanyahu trip to Washington. It would be the first time the two meet in person since Trump has stepped into office. How significant could the meeting be in terms of the ramifications on the ceasefire?
I mean, I think what we're looking for is the dynamic between the two of them, and it's a really interesting one. And it's, at least for me, as been looking at the region for a long time, I think the dynamic between Bibi and US presidents has typically gone one way, which is that he always gets his way. And with Trump, it's not necessarily going to be the case. I think that we've seen over the last couple of weeks, particularly via Witkoff, his representative, that Bibi doesn't always call the shots. Now, it's clear where Trump's priorities lie, let no one be in doubt what his intentions are. He freed up these 2,000-pound bombs and so on and so forth. I think that is a statement of intent. On the other hand, he seems perfectly willing to tell Bibi exactly what he wants and to expect Bibi to deliver. And I think that, for the first time, you've got Netanyahu confronting a US president that is willing to do that.
Do we know what the U.S. administration's long-term plan is for Gaza? And of course, yesterday, the president made some waves with those clean out Gaza comments, received a lot of pushback, obviously, from many Arab countries. Yeah. But what is the long-term strategy here, do you think, from the U.S. administration's perspective?
I mean, I'm not sure there is one. I mean, it appears, or it has been reported, that he repeated similar sort of comments on Air Force One a few hours ago, and he said he intends to call Sisi in Egypt and Abdullah in Jordan and kind of reiterate that ultimately is maybe the plan, and you can sort of see that direction. Now, as you said, neither of those countries seem at all interested in going along with it, but we'll see what he offers on the table. And again, Trump does have a tendency of getting his way a lot of the time, but it's going to be a tough one to sell, I would say.
How closely should we be watching the developments in West Bank? And of course, a lot of attention on Gaza right now, and the fact that tens of thousands of Palestinians are looking to return back to the north. But then we've seen a flaring up of tensions and hostilities in the West Bank once again. Yeah,
I mean, it's been this low-level issue, for many years, but particularly since the start of the Gaza war. You have seen very high tensions in the West Bank, and I know we did a reporting trip up there a couple of months ago, and clearly from the Israeli side there is a deep concern that you could get a repetition of what you saw coming out of Gaza in October 2023 coming out of the West Bank. So there's definitely been a crackdown, there is definitely rising tensions there, and you don't really have much of a Palestinian Authority of any note there. There isn't much credibility in terms of their ability to govern, but also their ability to kind of get them all working together and get some sort of deal of sorts.
I guess this all just boils down to the question of how long-lasting the ceasefire is going to be. And we know that the exchange of hostages for prisoners is continuing on a weekly basis, but equally, within the Israeli government. The cabinet is divided. We know Ben-Gvir pulled out of the government in protest to the ceasefire deal. Is there going to be more pressure from within on Netanyahu to perhaps not continue with the ceasefire?
Yeah, 100%. I mean, I think once you get the hostages out, particularly those that are still alive, that removes a lot of the incentive, I think, to keep the ceasefire going. And yes, he has a finance minister that is absolutely insistent that the war must continue because the war goals, so-called, have not been met, which is the complete destruction of Hamas. Now, it's very hard to see how you can actually achieve that, but nonetheless, if he pulls out of the coalition, effectively the government falls.
Yeah. Okay, so still so much up in the air when you think about the future and the ability for the ceasefire to actually last in the long term. Bloomberg's Stuart Livingstone-Wallace with the report there. Well, still ahead, as we get more from Trump on his tariff plans, metals are sliding. We discuss the outlook for commodities a bit later. This is Bloomberg. Well, big market rout yesterday with the S&P pulling back 1.5%. We had the Nasdaq and the session 3% lower. Today, futures are trading slightly more flattish. We've got S&P futures just marginally in the red. Nasdaq actually leaning towards the green, up 15 basis points. This as the market continues to address some of the big implications of the Deepseek R1 unveiling of their own LLM. So coming up, we're going to talk more about that, as well as the developments in Congo.
This is Horizons Middle East and Africa, our top stories this morning. Most Asian shares drop following a bruising session on Wall Street as fears around China's AI progress spark a sell-off. Nvidia loses $589 billion in market value, the biggest one-day drop in history. The dollar strengthens after President Trump says he wants across-the-board tariffs that are much bigger than 2.5%, and he'll soon add them to semiconductors, pharmaceuticals, and steel. And Israeli Prime Minister Benjamin Netanyahu is planning a Washington trip to discuss the Gaza ceasefire with President Trump. It's just gone 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg.
And I'm Jumana Versace in Dubai. Welcome to the second hour of Horizons Middle East and Africa. And Jen, well, obviously more talk about tariffs this morning because, as we know, that is Trump's favorite word in the dictionary. But then Deepseek is shaking things up. A huge market rout yesterday.
Yes, it's either tariffs or tech. Tariffs or tech. That seems to be a bit of the narrative that Wall Street is fixated on right now. But let's just take a look at where markets are positioned because, yes, as you mentioned, Jumana, really the story on Monday was about the sustainability of some of these high valuations, these AI investments, especially coming off the back of China's Deepseek. If we take a look at U.S. equities, stabilizing after, again, what was really quite a bruising day for Wall Street. We did see the Nasdaq closing under 3%, and also the S&P slipping as well. But right now, as you can see, Nasdaq futures tilting ever so slightly higher. But the real question will be how investors are still feeling, especially during a week where we are going to get earnings from some of the biggest magnificent seven. The U.S. 10-year yields are inching up ever so slightly, trading at just 4.55%. But on Monday, we actually did see yields dropping as many investors really flocked to the safe haven. Yields were dropping, and haven currencies also strengthened. Not exactly the same story, though, that we're seeing this morning. We're seeing some of those haven currencies that were strengthening on Monday, weakening a bit this morning, and the dollar strengthening, though, as a result, that coming after Trump's comments around tariffs. Right now, the dollar up almost 0.4%. Also stronger this morning is crude, almost 0.5% higher, and that, of course, again, comes off the back of those comments from Trump, raising the stakes again on this narrative around tariffs. And I just want to get back to the main story on Wall Street that they're focusing on, and that is, of course, tech. And what we did mention earlier in the show is that Deepseek really created this risk aversion event on Monday. But really, one of the biggest companies to be affected was Nvidia. As this chart is showing, we did see the market cap change. It shed just under $600 billion in value, fell back below the $3 trillion mark. That is still significant, of course, but it is the largest drop in value of any S&P member on a closing basis. So the question will be, what do we hear from many of these companies about the AI trade moving forward? But let's check in on how markets in Asia are faring. We mentioned it is a shortened week over there, but Avril Hong is standing by in our Singapore studio. Avril, what are you watching?
Yeah, Jen, we were tracking that Deepseek fallout, but I also thought I'd track what we're seeing from Trump's tariff threats, because he's put these issues back on the table for investors, as his Treasury Secretary Scott Bessent in a Financial Times interview talked about how he's backing universal 2.5% tariffs. Trump says he wants more, and he talked about how they're looking into tariffs for chips, pharmaceuticals, metals, and the dollar, as you alluded to a short while ago, which experienced that reprieve last week, that strength being reinforced yesterday and today as well. That's really putting pressure on FX in the Asia Pacific, including the renminbi, dollar China moving towards that 7 to 8 level. Keep in mind as well that if Trump comes up with any headlines during this long holiday, that could be problematic for the yuan, the risk-sensitive currencies like the Aussie under pressure, even the Japanese yen that earlier sort of saw a bit of strength creeping in thanks to a bit of safe haven demand, as well as investors, I think, heeding the hawkish signals from Ueda last Friday. That's succumbing to greenback strength as well. So keep that in mind, even as we keep an eye on Deepseek, watching these tariff signals and the impact on the FX space in Asia as well, Jen.
Yeah, it will be interesting to see how that changes over the next few days as the Lunar New Year kicks off. Thanks so much, Avril Hong in Singapore for us. Let's turn back to the African region now. Rwanda's dollar bonds slipped after a rebel group aligned with the country said it seized a key trading hub in the Democratic Republic of Congo. The M23 militia group says it seized the city of Goma in one of the most significant escalations in years in the long-running conflict. Bloomberg's Ndiro Oganga is in Kigali, Rwanda, and has been following this story for us. So, Ndiro, thanks as always for joining us. So what kind of international response have we seen since the M23 made this surprising announcement for many people about their seizure of Goma?
Hi, Jen. So the international community has been relatively muted, not just in the last couple of days, but also in the last 4 years after fighting escalated in the eastern part of DRC since 2021. In the last UN Security Council meeting, we saw United States and other members condemn Rwanda, but they fell short of imposing sanctions on the country. Observers say this is because President Paul Kagame has amassed a lot of influence, not just locally, but also globally, and he's become such an important ally to some of these Western countries. Take France, for example. They're depending on Rwanda's army to protect some of their mega projects across the African continent, including Total Energy's 20 billion natural gas project in Mozambique. Be that as it may, the takeover of Goma is like a red line that the country has crossed, and criticism is beginning to trickle in. You have France's ambassador to the UN condemning the offensive by M23 with active support rather from Rwanda, and you also have the UN Deputy Permanent Representative to the UN saying that attacks against peacekeepers can form basis for sanctions against the country. But as the international community tries to decide what is the next diplomatic course of action, Goma is a city in the dark. There's no electricity, there's no water, food prices are rising, roads are blocked. M23 have taken over the port and the airport is also blocked. You have Red Cross that are saying hospitals are overwhelmed and people are now turning schools into makeshift shelter.
And Ndiro, when it comes to Rwanda's involvement with the M23, we've heard President Kagame say a few different things in the past about the country's own involvement. What has been the impact, though, right now?
we're beginning to see that impact unfold. Rwanda's 2031 issue dropped by over a cent to trade at 84.3 cents to the dollar. And this makes it one of the worst performing in a Bloomberg index of hard currency debt from emerging and frontier markets. You also have Red Intelligence saying that these losses are due to higher pricing of political and economic implications from the escalating tension in DRC. Rwanda is also counting its losses. The Rwanda Defense Forces spokesperson says that 5 people have lost their life, 35 have been injured from the fighting that is spilling over into the border. And RDF has been deployed not only for safety and security of people, but also to protect their territorial integrity. And we're hearing the same tough language from DRC, where they're saying they're not going to cede even an inch of their territory, which just increases the prospects of escalating tension between these two countries. In the next 24 hours, both President Felix Tshisekedi and Paul Kagame meet with President William Ruto, who will be trying to broker a peace deal between the two countries.
Yeah, fast evolving situation there. Bloomberg's Indira Oganga following it in Kigali, Rwanda. Indira, thanks so much, as always. Now, for a look at some of the other stories we are following in the region. Mozambique's central bank has extended its longest easing cycle since 2017. This as the East African nation looks to boost an economy shaken by post-election unrest. Mozambique has witnessed widespread disruption since disputed elections in October, which extended the ruling party's 49-year rule. And Ghana has kept its key interest rate unchanged for a second time in a row as it fights inflation. The Monetary Policy Committee held the rate at 27%, while forecasting price pressures will ease as the nation's new government tightens public finances.
Well, let's continue the markets conversation as investors digest the two main stories this morning, tariffs or tech, as Jen was just outlining. So for more, Bloomberg's MLive reporter Mark Cranfield is in Singapore. Maybe let's just start with the big tech story. The NASDAQ rout yesterday, Deepseek, which is a company that not many of us knew, unless you're really in the weeds in the chip space, has completely upended the narrative about U.S. AI tech dominance. How should we read the reaction in the NASDAQ yesterday and in Nvidia, which dropped 17% throughout the course of the day?
Well, we're still trying to figure out who's the winners and the losers from all of that mess that was created yesterday. And it's you can see it transpiring in the Asian markets today. If you look at some of the things which are happening in Japan, you can see clearly there some companies are very concerned that they're too closely associated with Nvidia and they could well be the losers from the fallout of lower cost for AI products. On the other hand, you've got some Chinese tech companies who will expect to make benefits from the fact that they can access some of that technology for themselves. So you're seeing a bit of a divergence here. Performance of some of the big companies, we've seen some companies such as Advantech in Japan has fallen some at 18% over a less than 2-day period, which is pretty dramatic. And that compares obviously with Nvidia did as well. They're a much smaller company in that point of view. And then you can see some isolated winners in China. But the problem for the markets in Hong Kong and China, they've just gone on holiday. They won't come back until next week. In the meantime, you've got all these large tech companies in America are going to do their earnings reports. You've got Microsoft, Tesla, Meta and Apple all reporting in the next couple of days. And clearly, whether they like it or not, the questions they have to answer will all be about how this cheaper AI will affect them. Now, the market initially is suggesting that Meta and Apple are two beneficiaries of it. Others might not fare so well. But everybody is going to have an answer. How are they going to deal with this change? And if there's a lot of disruption over the next couple of days, high volatility, by the time that Asian markets, particularly the Chinese tech companies, come back on Monday, they may be facing an even more volatile situation than they were this week. So there's a lot to play for over the next few days.
Yeah, and people talk about rich valuations in tech space. But again, I was just looking at what analysts are expecting in terms of earnings growth out of the Magnificent Seven. And it's still looking like something like 22% earnings growth year on year. So still substantially higher than the rest of the basket. But it's not all there. As ever, President Trump has been talking about tariffs again. Does that explain some of the strength that we're seeing in the USD this morning, Mark?
It certainly does. I mean, as Avra was saying earlier, you can see across the board here, dollar's pretty strong, particularly against the Japanese yen here in Asia. And what's happening there is the extension of what we saw yesterday. So if you think back 24 hours, we had this on-off situation where there was a risk of tariffs being imposed on Colombia. Now, although the Colombian currency doesn't really trade in Asia, it was generally seen as a positive thing for the US dollar and that has followed through to today's trading as well. Today, as Avery was also explaining, there's a threat now that tariffs will be coming and they'll be higher than 2.5%. That's what Trump is saying. When they do come, he expects them to be on the big side. So traders are very reluctant to give up their defensive US dollar positions, and knowing that there could be more things very suddenly thrown at them over the next few days, they're hanging on to that. And in fact, if anything, they're extending those plays, particularly against the yen and the euro. So that's where we're seeing the dollar strength. There is some divergence within that. The Swiss franc is outperforming to a certain extent. It seems to be the favourite haven currency among the majors. But for now, certainly, people are on the defensive. They've seen the last 2 days where there have been on-off situations related to potential tariffs, and they don't want to expect that the days ahead are going to be easy. They will be thinking there'll be some bombshells on the horizon. We better be long dollars to prepare for that.
Yeah, though I am keeping my eye on the euro. We seem to rebounded from getting very close to parity. So we'll save that thought for our next conversation. Bloomberg's MLive reporter, Mark Cranfield, thanks so much. Well, coming up, commodities traders are watching closely as U.S. President Donald Trump raises the stakes on planned tariffs, potentially adding risks to global trade. The details next, and the impact on commodities. This is Bloomberg.
Welcome back to Horizons, Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Now, oil steadied after a volatile session as U.S. President Donald Trump raised the stakes on planned tariffs, potentially adding to risks for global trade. Let's bring in Bloomberg's Andrew Janes, who is in Singapore following this story for us. So, Andrew, it wasn't a question of if, but when we were going to get some clarity about Trump tariffs. What exactly, though, do these latest comments mean for commodities?
Hi, Jennifer. Yeah, well, we've had a lot of tariff news this morning. Trump gave this speech in Florida in which he sort of singled out aluminium, steel and copper for potential tariffs. This was part of a wide-ranging speech in which he also talked about things like pharmaceuticals, semiconductors. We then had a reporter in the Financial Times saying the new Treasury head, Scott Bessent, favoured starting with a 2.5% universal import tariff and then gradually increasing that. Trump then came out after that and said, no, actually, the universal tariffs should be a lot bigger. So, yeah, a lot of tariff news. The dollar rose on all of this, meaning commodities across the board. That's generally bad for commodities across the board as it makes them more expensive for many buyers. And then we've also got the prospect of trade wars, which are going to be damaging for economic growth. The one commodity where you would have thought that might have done well out of this, gold, that hasn't really moved much, mainly because the rise in the dollar has sort of cancelled out any gains there.
Well, and Andrew, we also did hear from Canada potentially on this potential threat of February 1st tariffs. I mean, is Canada one of the direct countries in the firing line? What other countries could potentially be hit if we do see these tariffs that Trump has just mentioned follow through?
Yeah, well, you're right. In terms of the metals tariffs, Canada would likely be hardest hit. Although it's important to remember that sort of US demand for the three metals Trump talked about, copper, aluminium and steel, is actually relatively low. It's about, as a percentage of global demand, it's about 8% for aluminium, 7% for copper, 5% for steel. Canada is the big supplier of aluminium to the US, supplies about half of the US's aluminium imports. It's also second biggest after Chile for copper, and it's also the biggest steel exporter to the US, with Mexico and South Korea also significant. Out of those three, the only market where the US is really heavily dependent on imports is aluminium. So if these sort of tariffs do turn into reality, that's where you might see the biggest price reaction.
Fascinating. Bloomberg's Andrew Janes. Andrew, thanks so much for the update there. Now, for a look at some of the other stories we are following this morning, Bloomberg has learned that Turkey's government is hoping to reach a $6 billion defense deal with Saudi Arabia that could see the kingdom buy warships, tanks, and missiles. The agreement, which would involve Saudi joining a Turkish jet building project, could be finalized during a visit by President Recep Tayyip Erdogan to the kingdom around March. President Trump is preparing an executive order for a next-generation defense shield to protect the U.S. against ballistic missiles and other long-range attacks. The order will commission a system similar to Israel's so-called Iron Dome. The White House says attack by ballistic, cruise, and hypersonic missiles is a catastrophic threat facing the United States. EU foreign ministers have agreed to extend sanctions on Russia after Hungary lifted its opposition to the renewal. Budapest had been stalling the decision since December, with Prime Minister Viktor Orban saying he wanted to wait for Donald Trump's inauguration before deciding whether to roll over the restrictions. In return for Budapest backing down, the EU said it would provide several assurances relating to the bloc's energy security. Now, coming up, for the first time, Saudi Arabia opens foreign property investment in holy cities to foreign investors. We have the details on that next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Well, let's return to the Middle East. And for the first time, Saudi Arabia says it will begin allowing foreigners to invest in publicly traded companies owning real estate in the holy cities of Makkah and Medina. Let's bring in Bloomberg's Zainab Fatah. This is interesting because specifically it's real estate around some of those very important religious cities. Why are Saudi doing this?
So for a long time, the holy cities were off limit to non-Muslim investors.
Yeah.
And in Saudi Arabia, there's been a prohibition on investment by foreigners in those cities to avoid driving up prices too much and all of this, of course. But right now, they have major projects that will cost billions and billions of dollars to build towers and hotels and redevelop parts of the city as they want to expand the Hajj pilgrimage and the Umrahs to 30 million people per year. So there is a lot of investment that needs to come in, and Saudi Arabia want to draw foreign money into Saudi Arabia.
Was this a surprise to the investment community? Is there likely to be a big impact on the back of these rule changes?
Well, it was a surprise if you looked at the stock market, because when you looked at the Tadawul yesterday, it shot up. The real estate companies, some of them were limit up, some were the index for the real estate companies, which include 24 stocks. It was at its highest level since 2018. So definitely there was a lot of enthusiasm about this. A lot of investors believe that this will drive a lot of money into REITs across Saudi Arabia, and we will likely see a lot more REITs list on the stock market.
When we talk about the market being opened up to foreigners, which specific group of foreigners are they targeting here? Because, again, it goes back to the fact that these two cities are religious cities.
So the devil is in the details, as one investor told me yesterday. He said, basically, we will have to see how this rule is implemented when it comes to Mecca and Medina. Without being able to own the underlying assets, it might limit some of the appetite of global investors. That could mean that we might see a lot more money from the Middle East or a lot more money from Muslim-majority countries like Malaysia and Indonesia. And some of those countries have had a tradition of leasing towers for long term, some of them 70 years or so or more, where they were able, these funds were able to allow their own residents and citizens to come and do the pilgrimage for cheaper than they would normally do if they had to come and rent a hotel or, just deal with the normal setup of Hajj and Umrah.
Yeah, it's just another manifestation of the Saudi 2030 vision and diversification. Typically, you would talk about real estate in some of the metropolitan cities like Riyadh and Jeddah, but clearly this is part of a bigger plan to attract foreign money into other parts of the country as well.
Yeah, there is a lot of investment that going into the holy cities. And this is for investors, getting a slice of that is really, really important because it's a very steady market, and it's a market that's been going on for 1,400 years. Yeah. It's not something that you expect. It's a captive demand that is there for investors of hotels, of properties, and so on.
Yeah, I mean, pilgrimage is a big part of the tourist revenues for Saudi Arabia, and they speak about it every year. Zainab, fascinating. Thank you for bringing us that story. That's Bloomberg's Zainab Fatah. Okay, we're going to round up the show taking a look at how equity futures are trading after the big sell-off that we had yesterday. But futures not doing a whole lot, leaning towards the red. S&P down about a tenth. NASDAQ 100 actually leaning towards the green, despite the big pullback of 3% yesterday. Deepseek shaking things up in global markets. But that is it for the show. Horizons Middle East and Africa. I'm Joanna Versace in Dubai alongside Jennifer Zabazaja in Johannesburg. Stay with us for Daybreak Europe. This is Bloomberg.